Beautiful views from Jacksonville Beach. Best way to start every morning. That and doing a real estate walk and talk. Happy to be with you all here this morning here. Really cool thing. I got a question from a longtime client in my email inbox this morning. And I thought I would read the question for you all because I think it can really help those who are thinking about investing in rental properties and how to do it and what works and what doesn't work. So my good friend Janet asked, she said, Greg, do you know the zip code in Jacksonville, which is 32224? And if buying a house there, which may cost around $500,000, would work for a passive income investment? And she said, that being a little bit of a nicer area, are there enough renters to be able to realistically expect it to be rented out, or would it not be rented out, is her question. So fantastic question. This goes back to why you need to invest in those cash flow sweet spots. And welcome everybody for joining the Real Estate Walk and Talk. We're talking about neighborhoods and a question that was asked by a client as to what neighborhoods work for cash flow passive rental property investments. So 32224, as I mentioned, is a little bit more of an upscale zip code in Jacksonville. Home prices are around $500,000 in various points at 32224. And to answer Janet's question, it wouldn't work for a cash flowing passive income investment. So I thought I'd walk you through the numbers there. So I did some rough calculations, and when you calculate what the expenses will be on that home, you take into account the principal, the interest, the taxes, the insurance, the property management cost, as well as your expected maintenance and vacancy cost. You would need to rent that house out for somewhere around maybe $2,700 a month or $3,000 a month just to be able to break even on all those expenses. And there aren't a lot of rental properties at that $3,000 rate in 32224. So this is a trap that a lot of investors fall into. They like to go to the neighborhoods that the houses look the best because it makes them feel good about that investment. But when they look at their bank account every single month, they realize that they are going cash flow negative. And it's because they're not in an area where there is significant rental demand to be able to increase the price of rent, which ultimately produces positive cash flow. So the answer to Janet's question is that would not work for a cash flowing passive income investment, right? That would be more of one where you would go negative every single month from the rental income you collect versus the expenses. And, ultimately you would be doing that purely on speculation that home prices would appreciate over time. And that's not how I invest. That's not the best way to invest, in my opinion, because the number one rule of investing in rental properties is that they need to pay for themselves. That is the standard. And from there, once we've accomplished that, then we can start to look for some other factors like home price appreciation. So Janet, I hope that answers your question. I really appreciate you sending that in. And for any of you who have questions, I do a live Q&A every Thursday at 12:30. I put the link in the description. It's really easy to remember too. It's www.jwbqanda.com. Actually spell out and. So jwbqanda.com. You can go there, get the details, and you can join me and our host Pablo Gonzalez tomorrow at 12:30. And that's a completely informal, totally driven by your questions type of a format. So always a lot of fun. I see we've got 4 people joining. We've got William from my team joining. Hey, William, good to see you, buddy. Hope you're doing well. And I appreciate all of you joining the Real Estate Walk and Talk. So have a wonderful day, everybody. Talk to you soon. Bye-bye.